Good afternoon. Today is Tuesday, the 20th of May, 2008, and the market's closed. The S&P 500 did finish with a loss here today as yesterday's weakness spilled over into today. And you can see here that we're back below the declining 200-day moving average, as well as, well, I guess we're right on that trend line now. So let's see if this trend line is going to hold its support now that it's broken above there and has pulled back below the 200-day moving average. We may find some buyers in this area. Yesterday I had said that the key level of support here in the short term was going to be that 142 level, and 142 was taken out. So now we've got to become very defensive towards this market. It is back below the 5-day moving average, as well as again being below that 142 level. So I think at a minimum, before you look to get back involved in this market aggressively on the long side, it's going to need to recapture that 142 level and stay above that for a little while as well. This market, again, has gotten pretty extended here over the last few months. It's been in a great uptrend, and now we've got to look at some of these other trend lines that are, I think, relevant. This could come into play down near 140. And, of course, 140 is a important level as well. Here's the 139.5 area, but that 139.5 to 140 level is an important level that should be support if it comes down to that. That is, it's a potential level of support. Right now, you've got to be defensive, though. We've got this pattern of lower highs in here and lower lows. Late in the day, we did see that the buyers came back into this market and pushed it just above the daily VWAP, and we saw some heavier volume coming into it. So that's an encouraging sign. The daily time frame is still encouraging here when we look at the 10-day moving average above the 20, above the 50. But then again, we've got this bigger picture here that keeps us very cautious and reason for concern. So a lot of mixed messages, and got to play it, on a stock-by-stock basis. And when you have oil at $129 a barrel, there's a lot of reasons to be worried. But again, only price pays. Listen to the message of the market. Right now, it's saying become more defensive because we do have these lower highs and lower lows. Let's take a look at the semiconductors. The semiconductors, have been the strongest group this year as they have been up recently. This group closed at 32.46 last year, and you can see that we're just at just above that level, just barely positive on the year, and that we're also below that 200-day moving average again. So you got to be careful in here as well. Like I said yesterday, if you have profits accumulated in here, that you want to be aggressive about locking them in. And I think basically from the long side, you want to give this some time to settle in before you go near this once again in here. The Russell 2000 is holding above that 72.75 to 73 level that I've been saying would be really kind of critical for it this week. You can see, though, that it is below the 5-day moving average. So I think that probably going to need to see it clear 74 before we kind of have a green light on this market. Again, right now with the 5-day moving average starting to decline, it tells us we want to be cautious in here. It's had trouble with this declining 200-day moving average, and doesn't mean that this market won't eventually clear that, because again, it does continue to hold above the 73 level on a closing basis. That's important. So again, give it a little bit of room down, probably below 72.75, but breaking 72.75, then I think you've got that 72 level that comes into play pretty quickly. And for right now, it doesn't look like we need to look much further to the downside there. But if things get ugly, then perhaps this 50-day moving average down near these lows. The financials are really kind of the culprit here. And again, if they don't scare you out on the way down, just because it starts going sideways, doesn't mean it's going to turn higher. We've still got a lot of damage to be healed in here, and if they don't scare you out, they'll often wear you out. But this group broke down below this little trend line. I had indicated this intraday, but it's below this little, you can call that a bearish flag if you wanted to, but it's back below there. It's back below the $26 level, and this group continues to look terrible. It's not out of the question that we're going to come back down towards that 24.40 level that was important. And if you look at something like Citigroup, here we see clearly a very negative stock. No reason to go near these on the long side. Here's another plug for my book from Brett Steenbarger. Brett Steenbarger thought that it was an excellent resource for all technically oriented traders. And as he points out, I take you through the basics of technical analysis, but then I put together a concrete, practical, I think I spelled that wrong, not practical, illustration and explanation, but a coherent trading methodology. So again, available for shipping on June 7th. The NASDAQ 100, let's take a look at these. This market, as I've been pointing out, has come up to recently the 61.8% retracement of the highs that we saw back here in late October to the lows that were just made in March, and I drew that a little bit incorrectly. Let's try and make that a little bit more precise. Not that it really matters as far as an exact, spot on number, but here you can see that 2/3 retracement level. It's having a little bit of trouble in there, but clearly when you take all that away, this daily time frame is still very bullish looking. We've got this market still holding above the 200-day moving average, and that 200-day moving average is flattened out, maybe even starting to turn higher a little bit. So the NASDAQ is clearly in the best shape. 48 will continue to be an important level going forward. We do have this nice pattern of higher highs and higher lows on the daily time frame, and breaking below 48 would put that definition of the uptrend to rest here, but that could lead the way for a deeper pullback, maybe towards the 50-day moving average. But again, nothing here to suggest that right now. We have had a long, uninterrupted rally in here, and this trend line is, like we saw once very recently. I forget when it was, but this trend line, you can't really say that it's broken yet. It's clearly important. Obviously we've seen buyers near this trend line in the past. Market made a nice move higher from it the last time it touched it. Now it's consolidating here, and it's too early to say whether this will hold as support or whether this market may just kind of trap some buyers in before making a lower high and lower low. So if this market gets up towards this level right here at about 49.60, 49.70, I think you want to be very careful around in there. But if it can get above that 49.85 and stay above there for a little while, then maybe this market is back into rally mode. It seems as though it's extended quite a bit, and odds would favor a little bit further deterioration in price, maybe a move back down towards $48 a share. But always be prepared for everything, and you'll never be surprised in the market. Just be clear that if it breaks below this 48.90 or so and holds below there for a little bit, then I think you might see a quicker move down towards that 48. Clearly, it's time to be careful in here.